All right, welcome everybody. Thanks for joining us for our first footprint deep dive session. I know um, many of you are real new to this software and are just really just getting involved with the footprints. So this first session, what we want to do is we're going to dive in to what are footprints. So even if you've been around the software, if you're not new and you have been around it for a while, or you've used footprints for quite a while, I still think you're going to benefit from this session here. So I'm really going to dig into the details of the footprints. Can everybody hear me? A couple people or one person saying you can't. Okay. All right. The sound is good. All right. So I'm going to move on. Um, the Yeah, let me just move on here. So the introduction, we are the creator of the footprint chart. I like to say that because sometimes people who are new to the concept don't realize that. This is something that we innovated back in 2002, so 15 years ago. It was born at the CME there in Chicago, and then publicly available in 2003. And the story, I like to kind of tell the story behind it, especially since we're kicking off footprints. This was something I was a creator. I'm the creator of the footprints, and I was trading just like anybody. I was upstairs at the CME in an office. I was a member, and I'm just trading, doing my thing. And at the time, again, this is early 2000s. The shift had occurred or was happening to the screen or to electronic trading, but there was still quite a bit of pit activity, and I had a squawk service quoting me the markets, and I had these these speakers, and I'm listening to the market, and I'm trading on the screen upstairs at the exchange, and I'm hearing all these this volume called out, or Goldman, aggressive buyer, Merrill selling, and that's what's going on in the pit. And on the screen, I'm trading E-minis, and I would witness some of these moves happen on the screen. And unfortunately, everything that I was looking at was just it's what's out there still, except for the footprint now, and that's just open, high, low, close. It's bars, candles, or bars, and I wanted to see more finite data. I wanted to understand when the market moved up and they would yell out, Goldman selling, Goldman's hitting the bid up here. That was what's going on in the pit, but nothing was showing me that on the screen. I would just see price flickering around, and I really had no way to quantify how much volume was taking place. Were the buyers flipping to sellers? Were they meeting resistance? I needed a visual way to organize it, but then quantify it. That was the reason behind the footprint. And so, long story short, I was prototyping some stuff. Um, I was working on my master's in financial engineering at the time, and so I could code a little bit. And anyway, it turned into a product after I showed some buddies. So they clearly could see the benefit beyond what just I needed for my own trading at the time. So anyway, this is being recorded. I see a few people asking that. But that's the story behind the footprint. That's important to keep in mind, because as you that's kind of the context for what you see on the screen nowadays with the footprint. That's what it's capturing. Of course, the pits don't mean much or don't exist in most markets. But when you see this type of activity occurring, and we're going to see lots of examples over the weeks, what you're going to find is that story that I just told, if you keep that in mind, it'll make sense as you watch these footprints, and you just kind of think of that's how it all happened. So I'm going to give a detailed explanation of footprints today, and we're going to look at each type and kind of um, what goes in to creating it. So this is just the building blocks of footprints. I will not be getting into strategy today. That is going to be in future sessions. I want to break down how each footprint type is calculated. So again, if you're brand new to MarketDelta or the footprint, or you're watching this at a later date, hopefully you can watch this session and you'll have a really good understanding of what footprints are and how they can benefit you. And so then I'm going to make extensive use, probably in the second half of this, of the MarketDelta platform. And so it should be, anybody here should have the platform. We pretty much made that a requirement, and that's because we're going to be making extensive use of it through these deep dive sessions. Because ultimately, we want you to know what the footprint is and how to make the most use of it, but we want you to get a lot of value out of the software. So some of these we're going to be talking about things that are in the software that you probably didn't know exist, or just it'll help you seeing somebody move through the software. You'll quickly become good at using the software by attending these. So what are footprints? Well, you've probably seen this definition before if you've attended any recent webinars, but it's a chart type that lets you look inside the bar and literally well beyond the open, high, low, close. So it's a chart type. It's not an indicator, it's not a study, it's not a system, it's a chart type, like a candlestick or a bar chart. Then there's footprints. So that's what it is, but it allows you to look inside the bar to have more information. So it displays price, volume, and order flow in a single, easy to read data point. And I'll break all this down here in a little bit. But it displays price, volume, and order flow, all of them, in a single data point. And that's where, going back to that story that I told, that was really what I was trying to do, was capture all this information. I mean, let's face it, trading is split-second decisions, and you need to be able to make a read of what's going on as fast as possible and feel good about it. You have to feel like, yep, I understand what's going on. This either confirms or denies what I was looking for, and I'm ready to go. So that's what the footprint is attempting to do in the way it's constructed. And it's just a logical breakdown of a bar price by price. Now footprints, you might say, well, if they're so good, why weren't they around 50 years ago or whenever? Well, it's because they leverage electronic data, and you need a time and sales of what the bid and offer was. You need volume. You need all these things streaming out in real time in order to create a footprint. With just pits, you couldn't really create a footprint because the way the data was sent out, you just didn't have a simultaneous bid and offer. You didn't know how much volume traded with each trade. And now you do. Now it's just a stream of data that can be parsed and the footprint created. So that's why this is something you've only seen in the last 15 years, not 20, 25, 30, 40 years ago. So it's just a logical progression. So I like to show this graphic because this is, on the left is a candlestick, and everybody's familiar with bars or candles unless you're literally brand new to trading. But this represents the low of the bar, and this represents the high. And then this blue area, this represents the body of a candle, and so down here is the open and up here is the close. Now the reason the open is down here and the close is up here is because this was an up bar. That's why it's blue. Blue or green is the normal color methodology. If this was a down bar, the high and low would be the same, but the open and close would be reversed. It would have opened here and closed here, so it'd be red. It was just trading down. Okay, so I'm not going to go into that too much, but that's the way everybody's looked at data for a long time. So the footprint really takes all the prices that were within this bar and just slices it up. It just slices it up. Okay, let me turn on my laser pointer. It just slices this up, and that's what you see over here. So each little cell here is a price within this bar. This is the high price up here. It's this high, and then the low down here would correspond to this. It opened here and it closed here. So literally these two bars are the same. It's just now you have all this added footprint information or footprint data to make sense of. And I'm going to get into these numbers here in a little bit. So I'm not talking about that. I just want you to see that there are sets of numbers at each price level, and that is the footprint information. Okay, so that's the track that the traders leave, the volume. All right. So footprint consists of price. I just showed you that. Each row or cell in a footprint represents a price or a series of prices. Now I put that in because I'll show you later when we jump into the software. The platform offers a really neat way to auto aggregate price levels and footprints, and it just automatically does it. It's really nice. And so I'll show you that, but normally you just think of it as each row or cell is a footprint. Yes, this is being recorded. Sorry, I'm still fighting a cold, so I have to pause and take a drink of water every now and then. Okay, volume. So price, volume, and order flow, that's what we're talking about here. Volume is displayed as numbers within the cell, okay? And then order flow, that's conveyed through color on the footprint. So it might be coloring of the text, or it might just be the background color. And again, that depends on the footprint type that we're looking at, and we'll be looking at some examples, and it all makes sense. But price, volume, and order flow. So price is each row, volume is the numbers that are displayed in the cell, and order flow is conveyed through the color. Okay, so price, each row. So this is the price scale. This is the far right side of a chart. I just took this morning. I just zoomed in. I wanted to capture, this is just the price scale, every single price. This is, doesn't matter what instrument, but this was the E-mini. And then this was the bar, the current bar. And so when I say price, I'm looking at each row. Okay. See how it's just a cell. This is the footprint cell. This is that open, high, low. Well, this is a low, high. It opened here. It closed here. Again, we'll get into these numbers in a moment and how to make sense or what they are. But this is representing volume at each price. Okay, and this is actually a breakdown of that volume. All right, volume. It's displayed as numbers in this cell. So there's different footprint types. Again, we'll look at them in a moment. This is actually the volume footprint. This one I like because it's real, it's just straightforward. The number that you see in here, each price, remember, we're just looking at each price, price by price by price. This represents how much volume traded at each price level. So clearly, the bigger the number, the more volume that traded, right? Everybody, that's, you can all, I'm sure, make sense of that. So you can see very little volume traded up here at the high and even the low, but more in this middle section, we did see more volume. This is where more volume was transacting. Okay, and then the color in this case, and as I'll show in a little bit too, the darker the color, background represents more volume. So it's just a visual cue. All right, now order flow. Order flow is conveyed through color as well and lets you know who is trying to influence price more. This is the third piece, and it's a very important piece. We're trying to get an understanding of is people are trading. Remember, everybody's trading at these exact, if this was the bid and this was the offer, everybody's trading these two prices. That's where the market, all the volume's flowing until it's able to take out one of the prices and then move to a new price level, and then trading's at that level. You don't think of it that way, but it's constantly a battle between two prices. And what the footprint's doing is aggregating the volume and the order flow in a nice, easy to read graphic. So here we have, this is the delta footprint. And so the numbers that you see here are the delta. Now, I'll I'll get into that calculation in a moment, but the point here is um, if it's a negative number, you want to think of that as negative order flow, or selling, more aggressive selling. So we represent that as a negative number, and we represent positive order flow or more aggressive buying as a positive number. It's just logical, makes sense, right? Positive number, positive order flow, or more aggressive buying, and more aggressive selling is represented in is negative values. Okay, and so the darker the shades here are, just think that's an order of magnitude of how aggressive it is. Okay, and we'll look at the different footprints here in a second. All right, so these are just those three side by side. I just like to show this summary slide. I'm not going to get into that because we're going to be looking at a lot of real-time examples, and I'll give opportunity for you guys to ask questions as well. But some of the benefits, so this is for those of you who maybe are new and you're just kind of say, okay, I see the information here, but what's the benefit here? Well, it gets you closer to the action for one, and you're literally looking inside the chart. You see inside the chart. So you're not just waiting or seeing price move around. You actually have two other things that you can key off of, which are volume and order flow. And especially in the future sessions where we get into more strategy, you're going to see price can be misleading. Um, and I'm not going to expand upon that at the moment, but you'll see why volume and order flow can be telling a whole different story to price, and why that can be advantageous and helpful for you to be able to take advantage of that. So we'll definitely be diving into that in future deep dives. And that's some of the unique footprint patterns that we'll be discussing. Um, because you have volume and order flow, we like to say it helps you see the emotions of the market, because price really doesn't communicate emotions so much. It's just it's a level of value. It's what price are traders willing to buy and sell. And yes, if price is moving very fast, real frenetic and just chopping all over the place, I guess you could say there's an emotional component to that. But we like to say that by seeing volume and order flow, that gives you a much more true sense of what the emotions of traders are. And think of it this way: order flow. If you've seen a lot of green footprints, that's think of it, people tend to think of that as a positive. Market is being more aggressive, the buyers are being more aggressive, typically driving price higher. That's a positive emotion, where a negative emotion would be the market maybe trading lower, more aggressive selling, hitting the bids. And then volume, being able to see how much, what is the magnitude of people, how much are they willing to commit at each price level. That gives you a whole different um, view of it as well. So volume and order flow, don't think of that one or the other as better. You want to think of them together, and how do you make use of that information. And so that's we'll be looking at things down the road here in other deep dives with the strategy, but don't think that one is more important than the other. They're both very important, and you really want to think of all three of these: price, volume, and order flow. That is the value that the footprint brings in a single, easy to read graphic. So that's what we're going to watch. And then just having this information, of course, will bring more confidence to your trading, because you just understand things at a greater level. Any expert in any industry, anything, the more that you are an expert at, the more confident you're going to be able to operate. And that's just think if you go to start something new, maybe trading. If you're brand new at trading, you probably feel pretty insecure. You don't necessarily know what questions to ask. You don't even maybe know what markets to trade, or you just it's just can be scary. But the more experience you have, the more tools you're making good use of, the more that you know you've got people behind you to help you. And then just having that experience and getting the time under your belt, that'll lead to confidence. And so that's what we're trying to do. That's also the reason behind these sessions. We really do want to provide a good resource, an authoritative resource behind the footprint where you can learn, dig in, and then ask questions and refer back. And that's what we're doing here. So footprints, they represent the energy being exerted on a move. So I didn't say it that exact way earlier, but that's really what I meant. It represents the energy being exerted to a move in price. And you get to witness volume develop vertically, not horizontally. So what does that mean? Well, everybody, I mean, not everybody, but most people will apply some sort of volume histogram at the bottom of the chart, and they say, wow, this 5-minute bar, there's a lot more volume taking place in it than the previous 5-minute bar, or whatever, something like that. But what the footprint allows you to look at is actually the volume, not just over bar by bar over time, but price by price vertically. And that's a whole nother dynamic, and that's where having the intra bar, see inside the chart information, can help. And so you get to see as price trades higher or trades lower, is it drawing more participants in, or are they drying up? What's the order flow look like? There's a lot of other things you can start to extract. All right. So there's 5 footprint types in MarketDelta. Each is unique in the value that it provides. So there's the volume footprint. This is the total volume traded at each price. If you remember back to that graphic, and we're going to look at some real examples of these today, but it's the total volume transacted at each price or series of prices. Okay, so that's the easiest one to think of. It's just total volume. Bid ask. This is the bid traded volume by the ask traded volume. So if you took the total volume that transacted and you broke it down between the volume that traded when the price was the bid price versus when that same price was the ask price, because remember, it trades in and trades out. And what we do is we categorize that for you and just show you the breakdown of that volume. That's what gives you the idea of the delta, or the net order flow at each price. It's looking at that breakdown and showing you. So where the bid ask trades you, it shows you a value, a bid traded volume. X is just a separator. And then it shows you the ask traded volume. So it's just showing you maybe 20 by 50. Just showing you some numbers. Left, the bid traded volume, and on the right, the ask traded volume. But if you subtract, or the difference of those, that's the net order flow. Was it net buying or net selling? So delta footprint, for those who, there's definitely a lot of people who just look at the delta footprint because all they're interested in is they just want to know which side was stronger, the buy or sell side. And then they look at that over a series of prices within the bar, and they get an idea of what's going on within that bar. So you can look at any of these, but that definitely is positive, or popular, I should say, for that reason. It just simplifies it a little bit. Now the profile footprint is a graphical. It's not numbers. It's a graph. It's a vertical volume distribution, showing you the total volume at price. And again, we'll look at this. Imbalance footprint. This has a built-in algo that highlights the imbalances. these volume imbalances. I'll describe that in detail here in a moment. So let's first look at the bid-ask footprint. So this displays the breakdown, as I said, of volume and how it is traded. The number to the left is a bid traded volume, and the number to the right is the ask traded volume. The color is either blue or green if there's more aggressive buying, and the color is the background. That's the footprint background. So the text is not being shaded, just the background, and it just gives you a way to tell, is there more aggressive buying or more aggressive selling at this price. So red if it's more aggressive selling, and the shade of color. So the shade represents the level of aggression. So the darker the shade, the more aggressive. The lighter the shade, the less aggressive. Okay, so if we're looking at blues and reds, the darker the blue, more aggressive buying, and the darker the red, the more aggressive the selling. I like to bullet these out because then if you're reviewing this at a later date, it gives you some things to really key in on. I don't want this to sound repetitive so much, but I really want it to be a blueprint for learning and reviewing. So the delta footprint, these concepts all flow together. But red, more aggressive selling. We've already said that. That's what you're going to see here. More aggressive buying is going to be represented in blue or green. So that's your colors. And it's a positive number represents more buying. Now, someone's probably thinking, well, what's more buying or what's more selling? And more buying represents more trading at the ask, more aggressive, more volume trading at the ask versus the bid. Okay, and selling, more aggressive selling would be more trading at the bid instead of the ask. Okay, hopefully that makes sense. And there's some stories that could be told around this, and Anthony's answering questions. If you type in, he's a little under the weather today, so he's not talking today, but he's got some good stories when it comes to understanding and putting this stuff into perspective, and that'll be in a future session, I'm sure. Be able to look at that. So darker colors represent more aggressive buying or selling. I've already talked about that, but I'm reinforcing it. The darker the color, the more aggressive. Volume. Total volume indicated, it's just total volume at each price. That's what you see in the volume footprint. The darker the shade, the greater the volume. And I really want to get into the software here, so let me get through these last couple slides. Color of each footprint is determined by the delta. So on the profile footprint, it's a vertical volume distribution. The color of each cell or footprint, that is the delta. That's determined by the delta. So if it's red, it's a negative delta, or more aggressive selling at that price. If it's green or blue, depending on which one you chose, that's a positive delta and represents more aggressive buying. Okay. And the shape, so the profile footprint, this one's nice because you're dealing with color and shape. I haven't used that word yet, shape. The shape of each bar is determined by the amount of volume traded at each price. So you do not have a numerical value on screen showing you the volume on the profile footprint. What instead you have is the shape, or the length, really the length of the bar, as you'll see. And so it's, in some ways, for some people it's going to be better because you don't necessarily need to read the value. You just want to see how it relates to others and how it compares. So the longer bars represent more volume, and that's all you need to know. The imbalance footprint, like I said earlier, it has a built-in algo, and that colors the imbalance. Now, it compares, and I'll have to show you when we look at the footprint here in a moment, but it doesn't compare the bid and ask in line, meaning at the same price. It compares um, the bid price below to the ask price above. And that's really how the algo works. So it's just comparing the bid traded volume to the ask traded volume above. And we'll look at that. So the text color, the text is what gets colored here, not the background. So the text color is blue or green only if more aggressive buying meets the imbalance threshold. You'll like the demo I'll get into, because I'm gonna actually show, we'll be manipulating these pretty extensively, and it'll make a lot of sense. Text is red, again, not the background, but the text is red only if more aggressive selling meets the imbalance threshold. So here's the footprints. These are the 5 that we just discussed. We've got the volume on the left, and I will talk about this one for a moment. This is the volume footprint. It's just the total volume traded. The background is shaded based on the numbers. So the biggest numbers have the darkest shades. The lightest background have the smallest numbers. Okay, that's pretty straightforward, and this is real easy. But some of the benefit you get to see is where the volume clusters are. Moving over though to the bid-ask footprint, this one is this breaks down these numbers. So if this 2538, if you added 816 plus 722, it's going to be 2538. So this represents how volume was transacted. So when whatever price this was, we don't have a price scale here on the chart, but whatever price this was, when it was the ask price, 1,722 traded when it was the ask price, and when it became the bid price, 816 were traded. So that's what you have. But because more traded at the ask, that represents more aggressive buying, and that's why it's shaded green. So going down to this one down here, you can see there was actually more that traded when this price was the bid price. And that's why it's shaded red. Okay. So moving on, let's just jump over. So this is the delta, and you can do the math here, do the subtraction, and it's subtract 1802 from 910, it's a negative number, minus 892. So there's negative delta, or minus order flow if you want to think of it, net selling at that price. That's why it's a negative number, and it's why it's red. So you'll notice any number that's negative has a red background, and any number that's positive has a green background. That's what you see on this one, and this one. All right, good question from Mark. He's asking, what are the green squares to the left? So this is that open and close. That represents the open and close. So remember when I showed the candlestick compared to the footprint earlier? Well, this is a bar. Let's call this a 5-minute bar. So this is the low down here. This is the low, and this is the high. It opened here and it closed here. It's green because it closed higher. Okay, so it opened here, traded around, and when this bar closed, it closed at this price, and so it closed higher than it opened, and it's green. If it closed lower than where it opened, this would have been red. So if it opened here and closed here, this would be red. Okay? Hopefully that makes sense. Good. Okay, so this was the delta. This is the profile footprint. So this is the one we talked about, shape and color. So you're going to notice the color is the same as you see in the Bidask and delta. But the shape, now we don't got text. We don't got any numbers in here. We got a curve, like a curve or a shape. And the wider the bar, the more volume that transacted. So if you look all the way over here to the left, you can see these two prices and this one. These are the ones that had the most volume. They're pretty close, almost 26, 25, 26, 2700. You can see this one, and this one. These are your widest bars, which experience the most volume. Okay. So that's all I want you to see on this one. Is it's a nice curvature. You can see where the low volume levels are within the bar and where there was quite a bit of matching up of buyers and sellers. All right. If you're familiar with volume profiling or market profile, you're going to like this one for sure, because in a lot of ways it gives you a similar look. And last but certainly not least is the imbalance footprint. Now, this one uses where I've just talked, everything was in line on this one, this one, this one, and this one. Everything was in line, meaning we were looking at the data at a single price. And on this one, we do show you the data at a single price. That's the only way to do it. That's what we do. So I don't want to confuse you there. If you look at 18 right here, this 816, 816 by 722, it's exactly what you see here, right? It's the same. However, what's different on this footprint versus the bid ask? There's two things. One, you don't have any background shading on this one, okay? And that's for a reason. There is no background shading. And what also you have on this one is colored text. So you either have greens or reds. Now some examples you may see I show blue instead of green. But anyway, the point here is we have text, colored text. And it is the imbalance footprint. This is colored based on a relationship. Instead of inline, what we do is we compare this offer right here against this bid. So look at it like this, diagonally. Now this will probably be another session unto itself, but I am going to talk a little bit about it now because we're going to be looking at it. So this one here compares against this one. This one here compares against this one. So the algo is constantly evaluating as price trades. It's comparing the bid against the offer above. So if I jump up to the top here, it's comparing this against this. Okay, that's just how it works. And so what the imbalance is looking for is literally an imbalance of volume between this price and this price, or this price and okay, so each row here is a price, right? So it's comparing the volume that's trading here against the volume that's trading at the ask, the bid traded volume against the ask traded volume. And what it does is it's giving you an indication when the imbalance threshold is met, and I'll show you how to set that today in the software. When that threshold is met, it colors it either green or red. So let's look at the case right here where it's red. 678 versus 177. I don't know what my setting was when I took this screenshot. I don't know what it was, but what we look for is like by default it's 200%. So is this number 200% greater than 177? Yes, it is, and that's why it was shaded red. It's a 200% imbalance, or greater than 200%, and vice versa. Here, 356 is well beyond a 200%, and that's why it got shaded green. So what we're looking, it's simply alerting you to the fact of these volume imbalances. As price trades, are we seeing these imbalances? And you're going to see this is probably the most popular footprint nowadays, and you'll see a lot of examples here as we go forward. But that is the methodology behind this one, and ultimately these confirm order flow. They serve as triggers, and it really takes some of the expertise we have over time and kind of codified it within a footprint to really just signal the footprints that have some sort of unique imbalance that you should be aware of. All right, so I think that's my last slide. Let's get into the software. So I'm going to, there's a lot of things I could cover. I'm focused on what I've talked about today. I'll probably give, we'll get into more software things. Some of you guys might be interested in this or whatever. We'll get into that probably another time. But I'm going to maximize this footprint. I really hope it's not too, hopefully you can all see this on your screen. And actually, here, let me do this, because I want you to see, don't underestimate what you're going to be able to learn by seeing me move through the software, because many of you are new, and seeing me move around will be of great use to you. So I'm going to go up here on chart. I'm going to right click on chart. I'm going to say add chart, and I'm going to go down to footprint. And I'm going to talk about what I'm doing and what I'm clicking on, because I want you to understand that. I'm going to maximize the chart. All right, so I just simply maximized it. You can see these are tabs. It's on a range bar, a 6-tick range bar. First thing I'm going to do is I want to change it to a 5-tick or a 4-tick reversal, just to do that. And then we're going to look at these footprints that we just went through. So right click on the footprint and choose modify footprint and choose source. So this is where, under source, this is where you change the footprint time frame or the interval. That's the only way to do it on the footprint. So you can see it's set to range. I'm going to set mine to point and figure, and I'm going to set a box size of 1 and a 4-tick reversal. So it's just simply a 4-tick reversal footprint. And with the market being more volatile, actually I'm going to go to a 5-tick. All right, so here's my 5-tick reversal. I'm only looking at the S&P probably today, because what I want to show you is I'm describing the footprints. I'm not talking, it doesn't matter. A footprint is a footprint, whether you're looking at crude oil or whether we're looking at the E-mini. So I'm going to right click on the footprint again and choose modify. All right, and style. So I've talked about source. This is where you change the interval or the time frame. Style is where you'll determine which style that we're going to look at. And let's start with volume. Okay, since I feel that's kind of the most basic. So I'm not going to, there's really nothing to change here. It's just this is the most straightforward. I'm going to hit apply. And now what you see, I'm going to click OK. This is what we just saw. Let me remove these. Okay, so this is similar to what we just saw in that screenshot, right? Where on the my PowerPoint, we're looking at total volume at each price. So what you see in here now, maybe we should focus over where the market's trading. What you see is a real-time building of the total volume transacting at each price. Okay. Again, I'm not getting into any strategy or anything today. My core goal is to help you really become knowledgeable at what you're looking at before you try to extract value from that. So you need to understand what all this is first. So going back, this is that open and the close. On this bar here, it opened here, closed here. This it traded down to here and traded up to here. And when it's black or kind of gray, my background is gray, and the doji, meaning open and close, are at the exact same price. It's gray. So yours, I don't know what color yours is, but that's what that is. Now, excuse me. So remember I said this is price by price, right? You can see it as price ticks around. You can see it's price by price. But if I grab the price scale here, I'm gonna left click and drag, like compress it down. You'll see the footprint's gonna collapse right there. So what it did here is now it's aggregating. So remember I said price or series of prices. So this isn't, for the E-mini, you really don't need to do this too much, but for crude oil or gold or maybe the DAX, markets that have a lot of volatility and move through a lot of prices, this is very nice because the footprint here in MarketDelta automatically will aggregate the volume or any of the footprint data across the series of prices automatically. So this is nice, and I just want to show that. Now to get it back to the way it was, just double click on the background of the chart and that'll auto scale it back. Or you can right click over on the scale and choose auto scale. All right. Any questions on how I was manipulating the volume footprint right here? I kind of hesitate to open up to too many questions because I really do want to stay focused on this. I'm only asking, are there any questions on the volume footprint, what I just showed? Okay, I see Anthony's answering a lot of questions, so that's good. Okay, no questions. So right click, I'm going to right click and choose modify, choose style, and now let's take a look at Bidask. All right, and I'm going to hit apply. So now this is kind of like that, almost think of it, it blows up the volume that you saw and breaks it down into bid traded volume and ask traded volume. All right, and so I'm going to click OK. And now, again, I've discussed what all this is in those slides, but I want you to see, because this is real-time data. Here you're able to see what's happening. It breaks it down, and remember the shading, or let's talk about color first. The color is done all in the background. The text isn't colored, it's the background. And so that background is color coded based on the order flow taking place at that particular price or series of prices. So again, if I were to collapse this down, grab it and crunch it down, boom, it will aggregate and auto color the background based on the series of prices that are represented. And when you hover over this, you may not be able to see this on my screen, but this little yellow box that pops up, it says ×2 in it. Yours might say ×3, ×4. That tells you how many it's collapsed. So it's collapsing two prices into one. Okay. Anyway. So here we are, the Bidask footprint. Everything is all the same that we've looked at. You still got this this candle body here. And let me show you. If you right click and choose modify, and then if you click on display, you see right this candle column? So this is where you can change. Some of you guys may not want to see that candle. You can choose none, hit apply. Notice it removes that candle. Now I have no idea when I look at this now where these bars opened and where they closed. So I don't really like it. I need to see that. So I'm going to actually set it to 4 pixels wide instead of 8. And I'm going to change it from the green that it was to a little bit brighter green and hit apply. And so now you can see it came back in. And instead of the green footprints, I'm going to change it to blue. So again, this is where you get to see me kind of move around and modify how these footprints look. I'm going to set it to this blue here, hit apply. And so now I've got green bodies of candles. I've got blue footprints represent net buying or more aggressive positive delta, and red represents negative delta or more aggressive selling. And I'm going to make this candle, I'm going to take it back to 8. There, now you can see it, right? Everybody get that? And I'm going to change the unchanged color to a lighter gray, so now you can see it right there. It just shows up a little bit better. All right. Just a few other of these options. Remember, we're in the display settings, so if you wonder how I got there, right-clicked on the footprint, right-click, modify, and then display. And these are all the different displays. Now, depending on what type of footprint you have that you're viewing, the style, we're looking at the Bidask style. Some of these options are going to be available and some won't. You can frame it. That just puts a box around it. You can hardly see. But dominant only. Now this is pretty nice. Let me show you this. So if you check this box dominant only, I'm going to hit apply. Here, the dominant only, what it does is it shades the side that experienced more volume. Okay, so as you look here, there's dominant order flow to the offer or the ask, and so it gets shaded. That's the side that gets shaded. When we look here, it had a little more contested, not much, but there was a little more on the buy side or more trading at the bid. But you can see. So sometimes this is nice because it really keeps your eye focused on only the side of the market that's experiencing more volume and what that order flow is. So that's just called dominant only. Okay, and I'll undo that. Now we're back to normal. Okay. Okay, there's a question. Can you make it highlight or frame the highest volume sell for bid and ask separately? Okay, so I'm going to go back, and there's this highlight it menu. So again, if you right click on the footprint, choose modify FP, and you choose highlight it, this opens up the it's basically a couple studies with multiple options built right into the footprint. And so you can do well, I'm not going to get into all these, but here's the most popular, the POC. So if I add that, and I'm going to make it yellow, let's just say close and then apply. Now do you see the yellow price, the yellow box? This is the high volume price for each bar. All right. Yeah, so I look, okay, good, Rob. Yeah, that's where it's at. So play around with the highlight it, and you'll see you can have it color code different sizes. boy, there's a lot of different stuff you can do in here, and I didn't really want to get into all that today. I still really want to focus on the core building blocks, which are just the footprints, not all these added studies. But that's where you can do some pretty cool things. All right, so going back to just as if I right-clicked on the footprint. Now let's look at delta. Hit apply. Here's the delta footprint. Okay, so this is showing just that net buying or net selling at each price. So this is for those of you who just want to see, was there more buying or was there more selling at a particular price? And that's what you see here. So as this market is working at filling the gap today and just kind of grinding higher, you see these spurts of buying, little retracement, but you can see what just happened here. And it just gives you an indication intra-bar of what the order flow is. Okay. The darker the shade, the bigger the delta. Now, when I say bigger the delta, you need to think in absolute terms. So you see right here, this minus 1380. This is a big negative number, but think of that as an absolute number when it comes to the color shading. So yeah, it's negative delta. There's quite a bit of selling right here, and that's why I got the darkest shade. And then this one here, 1118, it's the darkest blue. It was positive delta. But I just like to point that out. Think in absolute terms a lot of times. All right. And now let's take a look at profile footprint. And hit apply. So this is, remember the volume footprint that we looked at that showed us the total volume at each price? Well, this one shows us, it's still showing us the width of these bars represent volume. So in this one here, actually let me label it. I'll label it with the high volume print, make it yellow, because this will make it real easy for everybody to understand. So you notice how the widest bar here, the widest bar, or I should say the widest footprint in each bar is yellow. That's the high volume print, which it just helps underscore what you're looking at. So the shorter footprints experience less volume. So like these in here, very little, not much volume here. But as this thing traded higher, it was running into more and more volume. Okay, and that's an important thing to note. Those are some of the things we look for. Okay. All right. So the color. Okay, yes. So I just talked about shape. Let's talk about color. So I'm just reinforcing the things we saw in the slides. Now the color is the delta. Was the delta positive, meaning more aggressive buying, or was it negative, meaning more aggressive selling? So any shade of red represents selling. That's pretty intuitive. That's why red just kind of is always red. And blue or green, depending on which color you like, represents the positive delta or more aggressive buying. Now you notice all the charts, everything I'm showing you, I'm not showing all sorts of indicators and things applied to the chart. You can do that, but I'm really trying to talk at a fundamental level of what you see with a footprint. You can apply all your studies and things to the charts, but I really want you to grasp what just the footprint in itself in a pure manner what it is. All right, now let's take a look at imbalance. Now notice when I changed from profile, you see how there's some options here? Let me get rid of this one. All right, see how the options here? Now when I change to imbalance, you get some more options. And I am going to talk about this for a moment because this is, well, it's important that you understand what they are. So imbalance, I'm going to hit apply. And the first thing I'm going to do is change this blue to green because it's hard to see. So I'm going to click display. I'm going to change my ask from blue to green and hit apply. And so now you can see. It makes it easier to see. Okay, go back. I'm going to go back. All right. Imbalance footprint. Remember, the source is the interval. I'm not going to touch that. Threshold. Now this was on the other ones, and all that is a volume filter. So if I wanted my footprints to show me just 100 lots or bigger, I would just put in 100 here. And it just draws a footprint showing 100 lots or more. Okay. This will work on any of them. I'm just showing you though on here, but we're gonna leave that blank. I'll hit apply. Okay. Imbalance. This is the imbalance. Remember how I was talking about, let's focus right here, the 653 versus 27. 653 is certainly greater than 400% more than 27, which is why it got shaded green. That's it. That's why it's green. Okay. Now out of the box, yours is going to be 200. So watch, when I hit apply, you're going to see a lot more greens and reds show up. So there's just more, there's more on here. And so I like to look at 400%, 500. I like 400. Seems like that's the one I use the most. And there it is. So it's simply looking for a volume imbalance of 400% or more. And that's that. Now, some of you may be looking here at the chart and saying, wait a minute, I see some 400%, and maybe you're not, they're not colored. I'm trying to find one. Well, let me show you another setting. This min diff. Now this is a nice, I like to call it a power user setting, but it's not so much a power user setting, but most people don't do anything with it and they leave it by default. But if you trade crude oil or gold or silver or the grains, maybe not so much the grains, but this is worth noting. The min diff, what it does is, in order for the 400% to become a valid imbalance, there needs to be a minimum volume differential of 25. So I just don't see a good example. Well, right here, 88 versus 27. So if I set this to, let's see, 200. All right, see how this is shaded right now? This is red. It's 88 versus 27. It's 200% greater than 27, and the difference between them in volume is more than 25. But if I set this to 60, let's see, do I got that right? Let's do 60, yeah, 65. Yeah, so see, I set the minimum volume difference to be 65. So 88 minus 27 is not quite 65. And so it doesn't, even though 88 is greater than 200% more than 27, it doesn't give me the signal. And so what it does is, now I don't want to make that too confusing, but the point is it sets a minimum volume. A minimum amount of volume has to trade in order for an imbalance to show up. That's what it does. So you're not getting these imbalances with literally 3 contracts versus 1. So it forces it to be some real volume. This market really looks like it wants to fill this gap. So Okay, so that is what the volume imbalance, or the imbalance footprint is. I'm going to change it back to 400, hit apply, and that's it. Any questions? I know Anthony's been answering a bunch. Let me see if there's any for me. Okay, so I'm not getting into I'm not going to be commenting too much on strategy today. I've already been an hour, and my goal was to really focus on explaining what the footprints are. In future sessions, then we'll dive into some of the strategy behind these. But the goal here with these deep dives is to do probably one per week for the next several months. So that is what we'll be doing. And if you've recently subscribed to the platform, you'll be getting. We'll make sure you get those, get all those links. All right. Trying to think if there's anything I need to cover. Is that helpful? Does everybody understand now a little bit better, at least, what the footprint is? I know it seems very, in some ways it seems very elementary, but everybody has to start somewhere, and it's always good to hear the fundamentals again. And so now you've got a basis of what these things are, how they're built, and this little walkthrough that I just did, hopefully this is very helpful. If you're new to the software, how to manipulate these things can be helpful. So like I'm on a 1x4 or 1x5 chart here. If I type in 1,4, now I just went to a 1x4, right? So once I have it, like I got this, it's a point and figure source type. Once you're in it, you can change it within that source type very easily. If I went to a range bar, a 6-tick range bar, hit OK. So you can see it says 6-tick range bar. If I wanted to see a 4-tick, I just hit number 4 on the keyboard and press enter, and there's my 4-tick. If I want to see a 5, press 5 and hit enter. If I want to change it to crude oil, CLE, and hit enter, here's a 5-tick range bar crude. If I want to change that to 10, just type in 10 and press enter. And there's my 10-tick crude. Okay. Great question. He's saying he doesn't see the source type column in the setup study parameters. Here's why. So that everyone pay attention, because this is very, I don't want to say it's a mistake. It's not a mistake, but this happens a lot. You see up here, you guys probably have kind of similar buttons, but these ones up here are the chart types. So it's on a footprint chart type. That's what I have. But there's also a button down here called footprint. This is the footprint study. So what it does is it adds really the same thing. It adds what you see here to a different chart type. So if I chose candlestick here, right, I just changed my footprint to a candle. If I click footprint here, or if you right click and choose add study and choose footprint indicator, I'm going to just click add. Notice it adds the footprint on top of the candle. It's a study that goes on top of the candle. Okay, and so getting back to Naz's question, he doesn't see the source type column in the setup. So if I right click here on the footprint and choose modify footprint, notice you don't see source type here. You just see style and everything else that you can um, you can change. And the reason you don't see source type is because the source type isn't, you're trying to mess with the study, not the actual chart type. The actual chart type, in my case here, is a candle. All right. So for me, I'm on a 5-minute candle. And so if I change this to a 15-minute 1-5 and press enter, there's my 15-minute candle. That's how I change my time frame. Now, hopefully that made sense. Okay, good. That did. All right, good. Good feedback and comments here. So why don't we take a few minutes, and because we have a whole bunch of future topics to find, but if there's some topics that you guys would like to see discussed, type them in now. And we've, like I said, we've got a bunch lined up, but we're always open to suggestions. And I'm sure you guys could come up with some good ideas of things you'd like to see, and we can expand upon it with examples and descriptions and really walk through and make it very hands-on and valuable to you. So if you don't necessarily know right now and something comes to you later, just email it in to us to sales@marketdelta.com, or pass it on to Anthony or myself, whatever. We'll make sure, and we'll get these sessions as we structure them. We'll make sure that they're put together and useful for everybody. So that's about all I have today. It's a little over an hour, and I don't care how long they are. It's just more a matter of, that's just the material I wanted to cover today. So what you can do is watch out. We'll email you next week's session. It'll come out probably Friday. That'll probably be the routine. We'll send these things out Friday for Monday attendance, and they will be recorded. And we're working on a place to house these so you can log in and watch them. But these are for MarketDelta subscribers only. So we really are doing these as a value-added service to subscribers. So keep that in mind. All right. I'm just looking at the last few questions. All right, I'm going to wrap it up with that. Thanks for taking your lunchtime to sit in on this. Hopefully it was useful. If you do have questions, don't hesitate to reach out. All right, thanks everybody.